Multifamily Mindset
podcast. Think bigger.
What's up, everyone? Welcome back to this episode of the Multifamily Minute. Last episode, we talked about how to find deals once you've picked your market. So, what happens when that broker finally sends you something? Or when you find a property on LoopNet that kind of fits your buy box? You underwrite it. Now, don't panic. Underwriting doesn't have to be overwhelming. And that's exactly what we're diving into today. How to approach your first underwriting prep reps like a pro. So, right now, let's quickly demystify a couple things. Right? Underwriting is simply how we decide if a deal is worth pursuing. Like, that's it. It's just analysis. You're running numbers to get one of two outcomes. Yes, this is worth more time, or no, I'm moving on. You're not trying to perfectly value the building down to the last dollar. You're trying to move a deal to the next step or move on from it quickly. So if you're staring at your underwriting spreadsheet like it's a bomb and you don't know how to defuse it, just relax, right? You're just sorting numbers and that's it. So I want to break it down into three parts, and you can kind of call this like the ABCs of underwriting, right? Because every deal you look at will pretty much fit into this flow. So first, before you even open your spreadsheet, you have to make sure that you have the right data. Garbage in, garbage out. So make sure you have your T12, your rent roll, offering memorandum if it's available, and then a call or email with the broker for context as to why they're selling, what their timeline looks like, etc. Because you can't really underwrite a blank page, so you get what you need. After that, we'll want to build up the baseline, and what that means is start plugging in the actual numbers. So what's the current NOI? What's the current rent per unit? What are the real expenses, not just what the seller says? And what's your purchase price, your asking price? This step is just the baseline. So I want to know, what does the property look like today? Do not skip straight to projecting the upside. You want to know the as is first. You're buying a business. I want to see how is the business currently performing, and then we can look to see what we can do to get some upside from it. And that brings us to the next step, which is creating the vision. Right? So now it's time to look at what the property could be. What's your value add strategy? Can you raise rents? By how much? Can you reduce expenses? Add laundry, charge for parking? What are your value adds? Then what's your exit plan? Are you selling in 5 years? Are you planning on a refinance? Do you want to hold for longer, right? Use conservative assumptions, because this is where your vision meets reality. Your projections will help you figure out what price you need to pay to hit your target returns and whether the deal has legs or not. And the one thing I do want to cover, and here's the truth, most people won't say this. Your first 10, 20 underwritings will be an absolute dumpster fire. But that's okay. Underwriting is like going to the gym. It feels awkward at first, but with reps, you get sharper and faster. So instead of aiming to get in every cell in your spreadsheet perfect, aim to finish. Then aim to understand the story of the deal. Can this property generate income? Can I improve it? What does it fit? Is it what I'm actually looking for? Right? And that's the win right there. So from here, action mode. Here's your underwriting rep plan. If you guys can, underwrite 2 to 3 deals this week, even if they suck, especially if they suck, actually. Like, I want them to suck. I hope they do. If your first ones pencil out, it's a scary feeling. And uses like a simple spreadsheet. So if you guys don't already have the IMFM underwriting spreadsheet that we have here, you can try to find one online. It probably won't be as robust, but go ahead and try to use an underwriting spreadsheet. And then focus on the 3 questions. What does it earn now? What could it earn after improvements? At what price would it make sense for me? And key in on that last one. At what price would it make sense for me? If you can answer those, you're an absolute winner. Here's the deal. Underwriting isn't a magic calculator. It's a filter. And if you use it consistently, you'll stop wasting time on bad deals and start getting closer to the ones that make sense. So don't wait until you feel ready, whatever that means. Just start now, because the only way to get good at underwriting is just to do it. I know that was a really simple explanation of what underwriting is, but that is what I want to cover today, and that's all we have for today's episode of this Multifamily Minute. Next time, I'll probably be looking to talk about what it looks like for an offer that we can submit on the property. Let me know if you guys want to hear that. If you do, I'll definitely make an episode on that. But But until then, I'll see you.
Multifamily portfolio owners, listen up. Was your property hit by a storm? You may not even know it. 95% of owners don't realize they have storm damage and money waiting. Our expert team has uncovered over $20 billion in hidden insurance claims for clients. Don't leave millions on the table. Visit stormchecks.com or scan the code in the show notes to see if you're owed.
Multifamily Mindset.
Podcast. Think bigger.